Welcome back. So, day of consolidation, at least a morning of consolidation for the market in the equity sphere. Let's find out what's the latest in commodities. We have Manisha with us now in the studios. Manisha, so what's the Monday headline?
Well, everything seems to be buzzing, and on the higher side, we've seen buying return for many of these commodities. But I want to talk about copper because we have very contradicting fundamentals coming in for this one, and there is a lot of disruption in the global markets as well. Having said that, we've started on a positive note for this one. At this point, most of the metals are holding well post the short-term truce between China and US there. And when you look at that report card, as you can see, the best of the gains in this year till time have been in case of copper. At one point in time, we were up by nearly 27% as well. But clearly, copper has come off that. But after that, also, we are holding those gains. Aluminum, zinc down between 3 to 10% on your screens. Iron ore is down 3.5% as well. Steel prices, while are at double digit on the positive, but that also is because China has been saying that they will cut production going forward in 2025. That perhaps seems to be supporting steel. But in the non-ferrous space, copper clearly is the king there. If you look at the US markets, and this is what the street continues to talk about, that US and China, the two major producers and consumers. So when it comes to US, well, 40% of the refined copper demand comes in via imports. And that is the case with aluminum and steel as well, where we already have seen tariffs come in from US. 70% of primary aluminum that US uses or consumes is imported. 20 to 25% of steel that US consumes is imported. So it's going to be quite an interesting to watch on how tariffs and how much and how long do we see here and the impact of that on those metals as well. Come to China then, and Chinese numbers have been quite on the stronger side, even as there has been tariff concerns and we've seen slowdown concerns. When you look at copper movement within China, that has been quite on the positive. Refined copper production is near record levels. China imports for the month of April were quite on the higher side at a record 3 million tons yet again. And then the Chinese smelters are paying to process now. If you look at the treatment charges, they are negative of $57. So that tells you that the Chinese demand has been very strong when it comes to copper. Take a look at the global inventories now, and there's not so much change as compared to last year. We stand at 500,000 tons. But interesting to see is that much of this copper clearly has moved to US ahead of those expected tariffs. So US is looking at an 8-year highs in sense of copper inventories, 81% up in this year. In contrast to that, aluminium inventories have declined by 40%. They're trading at a 1-year low. And the lowest of the inventories are in China, where you are looking at strong demand. So the Shanghai inventories stand at just about 89,000 tons there. Also, you have the International Copper Study Group telling you that you're looking at a surplus of copper this year and the next as well. So those numbers look on the stronger side as it is. The uncertain only is on whether or not the US will put 25% tariff on copper like it has done for aluminum and steel. And the last plate tells you on the expectations on where the copper prices can be for the rest of this year now. Well, the most bearish of views comes in from Citi. They expect the copper prices to decline to $8,800 a ton in the second half, but it is between $9,200 to $9,500 that you have JP Morgan, Citi and Bank of America talking about copper. Currently, copper is trading at around $9,800.
All right. Manisha, thank you very much for that. So that's commodities in focus there. Well,